Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, May 18th, and this is a weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I cannot give you personal financial advice. This information is provided for entertainment purposes only and for information purposes. Please do your own due diligence. It's your money, it's your responsibility. Okay, let's get into it. I may have a little bit of residual from my cold last week, so bear with me. So first thing, wanted to talk about, I think, what I saw in the news this week, which I thought was pretty interesting, was the fact that gold is back above $2,400 an ounce and silver is above $30 an ounce. These metals are starting to tell us something, I think, and that's the anticipation of further rate cuts, further liquidity increases by the world's central banks. I think that's one thing. The other thing I think in gold in particular, we'll get into later, is just this continued move towards a multipolar world and a desire by many countries that are outside the Anglo-American hegemon to diversify away from the dollar. That's what I think that's telling us. I also think that I just touched on Money Fest 2024 continues as central banks cut. Now, we haven't seen, like, again, the bazookas come out yet, but they will. The bazookas being the, U.S. Federal Reserve, ECB, Bank of England, things like that, Bank of Canada. So when the Anglo-American world starts cutting rates, that's when I think you're really going to see things move a lot quicker in some of these hard assets. Again, central banks continue to cut rates around the world. Putin and Xi having their meeting last week, the hug felt around the world. Multipolar world is moving ahead. And there's a desire, again, as I said, because of the fact that the United States and its vassals continue to try to use the US dollar as a weapon of mass destruction, people are going to try to slowly but surely move away from the dollar. One of the beneficiaries of that is, in fact, gold. The other thing I wanted to point out is, we're pretty bullish here at Actionable Intelligence Alert on copper. It briefly was above $5 a pound this week. It pulled back. It's moved quite a bit over the last couple months. So a pullback is necessary to digest those gains. It became extremely overbought. It's in the news too much. So I don't think this is the end of the copper bull market just because of the fact that the global economy is expanding. It goes back to our original thesis. Demand is increasing and supply is not able to increase to match that. The price is going to go up. But as you all should know by now, prices don't go up in a straight line. So also wanted to point this out, pretty interesting chart you have even since back in the beginning of this year, even nickel looks like it's bottomed and is moving higher now too. So you're starting to see more and more of these commodities and these resources, as the world economy turns, as we're in this new liquidity cycle, with central banks cutting rates, economic activity increasing, you're going to see these prices move higher. This is from U.S. Global Investors. Thank you very much. Nickel prices are breaking out on supply concerns. So you see the 50-day moving average has turned up. The price is trading above that. This is a positive chart. So there was a recent conference on China and the future. And so I wanted to give some of the comments from Louis Vincent Gove that I saw on gold in China that he had at this conference. And I'll just read the quotes here. One of the key priorities today of Chinese policymakers is to de-dollarize their trade, to reduce their dependency on the US dollar. And this is much more for geostrategic reasons than economic reasons. I think in the past 15, 20 years, you have seen the US dollar weaponized time and time again to confront geopolitical rivals or problematic countries, whether call them Iran, call them Venezuela, call them Sudan, call them Russia. And the US politicians have used the hammer of the US dollar to beat people up. And China doesn't want to be on the other side of that hammer. He goes on, for most of my career, gold was always said to be the anti-US dollar. It was always said that when the policy mix in the US is wrong, when monetary policy is too loose, when fiscal policy is too loose, that gets reflected in a stronger gold price and a weaker dollar vis-a-vis gold. So I was smiling to hear that now a weaker dollar, stronger gold is actually a reflection on China, much more so than on the US. And finishing up, he says, I think if you're Chinese and you look, if my choices are Vancouver real estate or gold because I don't want to invest in China, maybe now gold makes more sense. And so I think that's what we're seeing. It's not the only thing, but I think, now that the gold price has broken out to all-time highs definitively, I think that, probably looking, and it took a while for this to happen, right? So I think we are in a gold bull market. I think gold will be the beneficiary of a lot of these capital flows away from the US dollar. It won't be able to absorb all of it, but it will be sufficient, I think, the flows to propel us higher over the next few years as the Anglo-American hegemon is trying to stay in power. It's just flailing about doing all kinds of things and just reinforcing the view with these other countries that they're taking the right steps to protect themselves. And we'll talk a little bit about that in this more in some subsequent slides. Here's a perfect example. Biden announces 100% tariff on Chinese-made electric vehicles. The Chinese are basically taking over the electrical vehicle market. If you go, not necessarily in the US, but if you look around the rest of the world, you're going to see these things all over the place. And that's one of the things I think that the Chinese policymakers are doing. They're shifting from to more industrial type things like heavy equipment, construction equipment. There was an anecdote I heard of a guy that got the dealership for a Chinese heavy equipment sales in the US, and it's like he's like the biggest retailer of these things here in the US. And so what's he competing with? These things are manufactured in China, and then he's competing against Deere and Caterpillar. They're manufactured here. So who has the lower costs? And the view I think that a lot of people used to have about, well, Chinese stuff is just crap. I think that that's slowly but surely changing. So goes on here to say the U.S. President Joe Biden has announced 100% tariff on Chinese-made electric vehicles as part of a package of measures designed to protect U.S. manufacturers from cheap imports. In a move that is likely to inflame trade tensions between the world's two biggest economies, the White House said it was imposing more stringent curbs on Chinese goods worth $18 billion, as well as a tariff increase from 25 to 100% on EVs. Levies will rise from 7.5 to 25% on lithium batteries, from 0 to 25% on critical minerals, from 25% to 50% on solar cells, and from 25% to 50% on semiconductors. So you see it's multiple things. And this is, again, part of the, my thesis around World War III. It's not going to be fought with, Chinese invasion of, Virginia and Washington, D.C. It's going to be trade. It's going to be economic. It's going to be political jockeying around the world. It's going to be financial. It's going to be using NGOs like the U.S. is doing in Georgia now, trying to destabilize that country. That's what you're going to see. That's the World War III I'm talking about, and this is part of it. Again, I just, talking about that anecdote about the guy that had the Chinese heavy equipment that, he's in 2 years, his business is like booming because the stuff is cheaper. It's subsidized by the government. There's no doubt about it. I mean, but, I find it amusing that, we're going to do this. And what are some of the outcomes of this? Well, it increases tensions with China. Okay. What else? What else does it do? It raises prices. It raises costs. These tariff prices are going to be borne by consumers, people that buy these products. How are you going to have a renewable energy, clean energy revolution? We don't manufacture any of this stuff here in the US. And so, a lot of it's from Chinese manufacturing or foreign manufacturing. And so what you're going to see as another, I think, outcome of this is continued outsourcing of manufacturing from the Chinese mainland to Vietnam, places like that. Mexico is going to be a beneficiary, is already a beneficiary. You're also going to see the Chinese, which they've been doing for the last 5 years, is focusing more, their trade with the US has basically flatlined. It's not really growing, but their trade with the rest of Asia and the rest of the world is growing, ex-US and Europe, because they're having the same kind of, because Western Europe is a vassal of the United Anglo-American hegemon, so it does what the US tells it to do. So again, does this hurt China in the short term? Yes, likely. It's not the best thing, but they'll just make it up the rest of the world. Where's the growth? Is it really the growth here in the US and Western Europe, or is the growth in these emerging markets that we've talked about before? I think, the question answers itself. So this is part and parcel of what I talked about this, as the multipolar world continues to develop between the Anglo-American hegemon and the rest of the world, BRICS, if you want to call them that. This is what you're going to see, more and more of this, right? And I just don't see how the U.S. comes out on top on this. U.S. versus the rest of the world. I mean, how's that work? And you're going to see, more and more. You just had this big meeting with Xi and Putin last week. Okay, I mean, so things are, all of the best laid plans of Victoria Nuland and Mice and Men is not working. And so, I have a different view on things, but my view doesn't matter. This is what's happening, and it's going to continue to happen. Even if there's a Trump administration, I think he'll be even more aggressive with the tariffs. He if you remember during his administration, I don't know if tariffs are good or bad. We don't manufacture anything here, so very little. So I don't know what we're protecting here. But neither do the Europeans necessarily. So a lot of this stuff is just going to raise. And so again, you're trying to have a clean energy revolution here, or a transition, if you will, to really ramp up via the Inflation Reduction Act, the new Green New Deal, if you will. And most of this lithium batteries and solar cells and these kind of things come from China, or a subsidiary of China that's operating in Vietnam, Mexico, or Malaysia, something like this. So again, this is just going to raise costs, raise tensions, and it's going to be inflationary ultimately and unproductive. So we'll see how this works out. But I just wanted to, will Tesla benefit from this? I don't know, likely, but who else benefits from it? Then again, the Biden signed into law the Russian uranium ban. So this is another example, right? I mean, it can share that kind of thing. So, let's see here. President Joe Biden signed into law a ban on Russian enriched uranium on Monday, the White House said, in the latest effort by Washington to disrupt President Vladimir Putin's invasion of Ukraine. It simply won't work. They are not going to disrupt it. I mean, the handwriting's on the wall, except for the most deluded people. Russia's slowly but surely, like a boa constrictor, now they have an incursion in the north part of Kharkiv. That's spreading out the thing. I'm not going to get into a play-by-play. There's plenty of people on the internet. You can go look and see what's really going on if you're really interested. All the Ukrainian flags came. Nobody's talking about anymore because everybody knows. No one likes to be associated with a losing deal. And, so this is what we're going to do. We don't have the resources here. 20% of our electrical generation in the U.S. is nuclear, and we produce very little uranium ourselves, right? Because we've let our strategically, that's what government should be like, focusing on that stuff, not running around the world funding NGOs in Georgia and stuff like that. But that's not what they do because they don't really have an energy plan, and so we end up with this kind of nonsense. We've got to be showing people that we're doing something. So it goes on, the ban on imports of the fuel for nuclear power plants begins in about 90 days, although it allows the Department of Energy to issue waivers in case of supply concerns. I think they better get the waiver template up and filled out, because there's going to be waivers given. Russia is the world's top supplier of enriched uranium, and about 24% of the enriched uranium used by U.S. nuclear power plants comes from the country. So I'm not an expert. Again, I'm a general investor. Leave it to others to figure out how long it would take to replace that with U.S. or other enriched uranium. I think, the last blurb here kind of shows, we're going to have Soviet central planning and have the U.S. government now get involved in increasing the enriched uranium supply, right? It says the law also unlocks about $2.7 billion in funding in previous legislation to build out the U.S. uranium fuel industry. So there you go. Again, another example. In the end, that no reactors are going to shut down. They're going to, if they have to grant them waivers, they will. This is a lot of, but this again raises tensions, raises costs, just free flow of goods, but again, if you're thinking strategically, but what's our strategic? I don't understand what the strategic plan is that the United States is trying to do. All I see is an oligarchy trying to hold on to a 200-year hegemon or a 150-year hegemon of Anglo-American hegemon. So I don't see, they need to understand that the rest of the world's going to keep advancing. And if you want to participate in that, there's a way to do it. And the way to do that is to be open to trade. Yes, there are bad actors around the world. And if somebody is acting bad, then we should, take them into consideration. But a lot of these things have our fingerprints on them. If you want to take it back further enough, it's not just like we're just sitting here and stuff just happens around the world. So we'll see how this works out. But we got an answer right after this yesterday. Russian uranium supplier Tenex issues force majeure notice after U.S. ban. Russia's state-owned uranium supplier Tenex has notified U.S. customers they have 60 days to secure a waiver exempting them from a law recently signed by President Joe Biden that bars imports of the company's nuclear fuel. The force majeure notice seen by Bloomberg, was sent to utilities including Constellation Energy, the largest U.S. nuclear plant operator, Duke Energy, and Dominion Energy, according to a person familiar with the matter who wasn't authorized to speak publicly. Constellation declined to comment, and Duke and Dominion didn't respond to a request seeking comment. So there you go. So the ban takes effect in 90 days after the president signed it, and 10X is saying, okay, you got 60 days to get a waiver exempting you from the law. I guess they'll stop exporting in 60 days. So they didn't say that, but that's what you can infer. So this is, again, so you got everybody scrambling around now. What are they going to do? Can we get a waiver? You won't see that reported, though, if the waivers are granted. That'll just be done really quietly. If they're even given, maybe they won't give them. Maybe I doubt that would happen where you would actually, affect the actual reactors. But again, guys, you have to have a plan, an energy policy. We don't have any of these things. We're just reacting constantly, okay, and throwing money at it and, thinking this through. So all the other sanctions didn't work. So this is going to, all of a sudden, what's this death by, 1,000 cuts? This is the 1,000th cut, and it will finally bring Vladimir Putin, this horrible tyrant that they cartoonishly have created, to his knees, and then we'll, get a neoliberal government in Moscow, and they'll be part of the New World Order. Is that the plan? I don't see it. This slide got out of whack here when I was talking about the resources. There's a reason why nickel, copper, all these things are starting to advance in price, notwithstanding the fact that you have more liquidity, but we also have global PMI, the Global Purchasing Managers Index, is at a 10-month high while price pressures remain elevated. This is directly from S&P. Every month they put out the global PMI. You can drill down to individual countries, but I like looking at the global PMI index. Why? Any reading above 50 indicates growing economies, right? Positive economic growth. So from the article, the global economic expansion unfolded at the fastest pace in 10 months at the start of the second quarter of 2024, supported by broad-based growth across both manufacturing and service sectors. Selling price inflation remained elevated, however, even as it eased in April. The J.P. Morgan Global PMI Composite Output Index produced by S&P rose to 52.4 in April, up from 52.3 in March. The headline PMI, despite remaining below the survey's long-run average of 53.2, is the highest in 10 months and is consistent with annualized quarterly global GDP growth of 2.7%. The latest acceleration in global growth was supported by faster services activity growth, though manufacturing output continued to expand for a fourth successive month, altogether reflective of well-balanced improvements in global economic conditions at the start of the second quarter of 2024. So there you go. So you can't just focus on individual areas. I like to look, when you're talking about these commodities and stuff, you have to look at the overall world. It's increasing. Yes, you need to pay attention to what goes on in China because they're sucking a lot of the resources, but you can't just be focused like on the US or Europe. Actually, I saw the recent statistics for Germany. It looks like Germany's actually starting to turn around. So you need to, I look at things from the global perspective and then drill down from there. But right now, this is another reason why, in order to have growing manufacturing growth, you need higher prices. You're going to have higher prices as raw materials are pulled into the process, right? So, and we know that every time that starts to happen, we're going to have rising prices. So good for us currently is what I'm saying. So I wanted to put out here the In Gold We Trust 2024 playbook is out. They call it or report. It's called the theme this year is the New Gold Playbook. It's 422 pages of precious metal and hard asset goodies is what I call it. I mean, I go through this every year. It's put out for free. I'll put a link to it in the show notes. If you're interested in hard assets, if you're interested in monetary policy, if you're interested in these things from a more Austrian perspective and just a more common sense perspective, then this is really, really a good resource. It takes a while to go through it. They have a condensed version too, but I'll put a link to it. I'll just take a couple quotes out of the executive summary. It says, according to the old gold playbook, the gold price should have fallen significantly in an environment of sharply rising real interest rates. This and several other laws seem to have been suspended recently. In the new gold playbook, Western financial investors are no longer the marginal buyers. Central banks and the steadily growing demand from emerging markets, especially China, have for the first time been able to more than compensate for weak demand from the West. And so we've already talked about why that is and why that's likely to continue. So Jesse Felder tweet, I thought this was interesting. The green line is the Dow Jones Industrial Average. The red line is the transports. You're making new highs in the Dow Jones Industrial Average, but the transports, according to Dow theory, are not confirming that. And so that's typically what you want to see. You don't want to see just the industrials moving higher. The transports are not confirming that. And the transports obviously are, everything, airlines, package delivery, truck delivery, that's what's covered under the transport part of the Dow Jones transport average. And if that's not confirming with the industrials, then that should kind of make your spidey senses go off and say, well, according to Dow theory, this is not this is not a good signal here. So Jesse Felder says the transports are the actual engine of the economy. We're at the point, again, where we're not getting confirmation from the transports that the activity that's happening actually supports the fact we've hit a new high on the Dow. So something to keep in mind. Again, I think the U.S. economy is not strong as people think. It's actually weakening more. We know that the statistics cannot be trusted. That's why you have to have a basket of them. And so, I think that if rates stay higher for longer, we're going to see more and more cracks develop in the economy. But, I've been wrong to this point about a recession, so we'll have to see what happens. But this is the remember, these financial market stocks are forward looking. They don't look at what's happening now or in the past. They're looking at what's going to happen a year, 18 months in the future. So this was attached to a Jordan Peterson tweet this week. I have seen this before, but I want to reiterate this to people. This is like the most important chart, I think, of why I'm bullish on energy overall for the long term. Basically, the slide is there are no low energy wealthy countries. So this is showing you the electricity consumption per capita on the left side, and on the bottom is the GDP per capita in US dollars. So you see the wealthy countries here at the top right have the most electricity consumption. There's no there's no low energy wealthy countries. Okay, that's not how it works. You need more and more energy inputs as you get wealthier. As GDP goes up, in order to facilitate that, you need more energy inputs. It's just that simple. There's no outliers. This is how it works. Okay, this is the curve. As you move up in GDP, you move up in GDP across the bottom here. Okay, as you get wealthier, you can need more and more energy inputs. This represented in electricity consumption. It goes without a doubt. You look at some of the countries that are like Somalia, Sierra Leone. These are really poor countries, really screwed up. Liberia, Afghanistan. They're not wealthy countries, and their electricity consumption is a fraction of what these wealthy countries are. There's no data centers being built in Somalia that I know of. So those who are concerned about oil demand growth, here are the updates from Bloomberg I get their daily energy email. And here is the forecasts from the IEA, EEI, and OPEC. They're updated. Here's the January 21st, and as you go through the year, February, March, April. The current demand forecast, you see OPEC has not changed. They're forecasting 2.25%, but you see that the IEA and EIA are slowly but surely pulling in their consumption or their demand forecast, but they're still basically around 1 million barrels a day for 2024. So I think, again, as we see global PMI accelerate, which I anticipate, or stay above 50, we see the global economy expanding, we will see oil demand go up. We will likely see the price, especially as we enter the Northern Hemisphere summer travel season. Memorial Day is coming up. That flips the calendar for vacations. We'll see what happens going into the summer. Is OPEC interested in raising production going into an election where a lot of these countries don't really care for the U.S. administration? So will Russia want to raise production when, so this comes into play. I mean, I don't have any insight into any of this. I'm just saying, regardless, demand's going to go up. Will OPEC increase production? Remains to be seen. As we continue to see the possibility that U.S. production is beginning now to flatline and plateau. So again, global oil demand, people talk about, well, what about, if we have a recession? Okay, well, here's the pandemic worldwide shutdown. It went down about 10 million barrels a day and shot right back up as soon as they opened things. Here's the great financial crisis. I mean, basically oil demand goes up every year, even, about 1 million barrels a day is the long-term average. So it says here, since 1991, annual global oil demand has grown by just under 1.1 million barrels a day on average, boosted by rising population and economic activity. We've talked about this before. So I think you're more likely to bet on increased demand than, that's, you just had a few instances where demand has decreased. And this is the outlier, which is you basically shut the world down and oil demand still only went down, 10 million barrels, and that was temporary. And this was what basically got me to a point. This was the buying opportunity of a lifetime. Made a tremendous amount of money on this bottom. So, yeah, I think that long term, that's one of our main themes here is the demand for energy, as we just showed in that previous chart, that as GDP grows in the emerging markets, as demand grows, price is going to go up because supply has atrophied. The ability to increase energy supply has not kept pace. And so that's a theme, that's a major theme for the Actionable Intelligence Alert newsletter. It doesn't play out in a week or 3 months or even a year. These are long-term secular trends that will be punctuated with intermediate cyclical declines based on recessions and things like that. But I think that if you pick the right companies at the right time, timing has something to do with it. Buying sell-offs, for example, and not falling in type cycle and waiting, if oil goes to $100 a barrel and everybody's talking about it, and then you decide to buy, well, then your returns are likely to be lower. I mean, it was obvious that oil demand wasn't going to just stay down here, that they were going to keep the world locked down forever was impossible. And so, I mean, things were down 80, 90%. And so it was one of those things, do you actually think oil demand is going to go away? I did not think that. And so it wasn't even really that hard of a trade because it was just obvious. If you understand energy markets, if you understand how an economy works and how it's petroleum and hydrocarbons are so infused into the modern economy, it was obvious as soon as the economies were opened back up that oil demand was going to come back very rapidly and the price was going to rise. So we were able to buy some very leveraged companies for very cheap, and they happened to survive, and they had some tremendous moves. We're talking about multi-100% winners. So, and that continues, especially in the oil services industry. We were able to buy a lot of the companies here. They're finally now, that money, exploration money, that development money is trickling down into that sector now, and we're starting to see the benefit of that. And we will, I think, for the next 5 to 10 years at least. So here's another chart, reserve life indexes for your major international oil companies and exploration and production companies has been declining for years. It topped out here around 2014 at 13.5 years. So what are we talking about? Proven reserve life. We're saying the proven reserves that these oil companies have, right? And so you're saying they have, at their current production, they have 10.2. This is a weighted average. They have 10.2 years of reserves at current production. That doesn't mean they're going to run out of oil in 10.2 years. It means that they're constantly having to invest. Remember, we've talked about this before, that this is an extractive industry that requires constant investment, right, to replace what you've taken out of the ground. And if you don't do that, you eventually will go out of business. But what's concerning there is that you can see that the lack of investment, they've allowed their reserve life indexes to contract for the last 10 years for a reason. This is, when shale was really pushing out other forms of oil exploration and development because shale was so cheap and so quick to be brought on, it overwhelmed the rest of the industry. And so the rest of the industry basically, when I use that word, atrophied, like if you're in a body cast because you got in an accident, you don't move any of your muscles, when they take the cast off, you're going to look like, a concentration camp victim. You're going to be all skinny, your muscles. And so it takes time, right, to get into physical therapy and get those muscles moving and get those joints moving and get those tendons loosened up. And so it's the same thing in this industry, because it's so many people have left, so much equipment was allowed to rust and fall apart. You're having to, the people that still have assets, that still have the ability, are now in a position to really benefit tremendously, because now the exploration budgets and the projects are going forward. There's simply not enough equipment and people to do this. And so that gives you a window of opportunity, because again, you can't just snap your fingers, call India and have some guys make an app over the weekend that solves the problem. First of all, it takes time for the mental blocking and the PTSD of the previous industry downturn to work its way through these management's minds. They're going to be conservative at first, but after several years of extraordinary profits, capital will start coming back into it when it sees the excessive returns. but that takes time. That takes years. And in the interim, you have, companies are able to make above average earnings and cash flows, and that's the opportunity. So this whole healthcare thing really bothers me. So I wanted to point this out. This was basically, the U.S. government saying that from the CPI report, Bureau of Labor Statistics, that health insurance price index has gone down. Is anybody really seeing that in real life? Because over here you had an article from I think it was one of the newspapers, and it was on May 10th of this year. It says, so you got the BLS saying health insurance premiums are coming down, but over here it says health insurance premiums shot up over 25% last year for 52% of policyholders. Here's how the impact can be reduced. I mean, this is another one of these oligarchies, okay? This is another part of the problem, okay? You have this health insurance industry. A perfect example of a crony capitalist, a crony part of the oligarchy, is this horrible senator from Florida, Rick Scott. I mean, he got tremendously wealthy. I think he was involved with United Healthcare. And now, is he the guy that you're going to send to Washington that's going to reform the healthcare insurance sector? Really? If you want to know, go to Open Secrets and look up these people and see who contributes to their campaigns and who gives them PAC money. That's who they represent. They don't represent you. People are being crushed by these insurance premiums. There's no real competition. It's an oligarchy. And look at the profit margins and look at, what these insurance companies are doing. Are they going to be able to raise premiums for health insurance 25% every year ad infinitum? At some point, what was 90% of your income going to go for health insurance? This is nuts. And so people say, well, see, capitalism doesn't work. No, we don't have capitalism. We have an oligarchy. We have a fascist type state, excuse me, where you have government and industry with a rotating door between these oversight in the government and these agencies that are supposed to have oversight on this. We don't need to do anything but open up the competition. You're telling me in every other sector, technology is available and inroads can be made. It's, they've pointed this out before. They've written articles. If you go and want to get LASIK surgery, it's not covered under insurance, but the price and quality of LASIK surgery has plunged over the last 20 years because it's open to competition. They don't want competition. So they've rigged the game and you pay. And everybody just sits there and complains about it and continues to send dirtbags like Rick Scott to Congress, excuse me, that got extremely wealthy running a healthcare insurance company. And he's going to reform it? I don't think so. But vote harder. Just keep voting harder and eventually it'll change. So again, I probably should have warned everybody about we're off the financial stuff now and into John's soapbox. So this is a guy who's a Professor Bill McGuire. And he put out a tweet last week. Here it says, if I am brutal, he's a climate change nut that thinks the world's going to be incinerated. You can go to he's a volcanologist. He's a climate guy. He's a nut. Okay. Here's what he said last week on Twitter before he took it down. If I am brutally honest, the only realistic way I see emissions falling as fast as they need to avoid catastrophic climate breakdown is the culling of the human population by a pandemic with a very high fatality rate. Well, everybody came at him, and then he tried to qualify this and say, I wasn't talking about culling actual humans. I was talking about culling economic activity. He got all convoluted. And of course, he realized that he was losing because everybody was coming at him. Here's the deal with guys like this. Okay, this guy's actually in academia. And there are many, many people, most people in academia are like this, not as radical necessarily, or they don't voice what they really think. These are the people that you're paying tens of thousands of dollars a year to indoctrinate your children. Okay. If this guy believes that to call the human race, of course, it's not him or his class of people that gets called because he's important, and only the little people that are unnecessary needs to get called. These are dangerous people. These people are anti-Christ. These people are demonic. These people are anti-human. Do you get it yet? Are you awake yet? Do you get what these people are all about? Who would say something like this? And so they make comments like, we need to get rid of all fossil fuels. That will call the human race very quickly. Within about a half of a year, about billions of people would be dead. Okay? So any of these things that they advocate that we do are worse than what any projections for catastrophic climate breakdown are. These people are dangerous thinking people. These people are evil people. Okay? So I don't know how you fix this, but this is what you pay for. And these people are running around loose. They get play. So of course he got called out because on X now, you're not going to get away from this. You're not going to have little minions in the back room with purple hair and nose rings stopping free speech. So he had to back this down and try to qualify. Then he shut the whole thing down and said, "Well, everybody's coming at me, so I'm not going to have this conversation." No, you said what you thought. Okay, we know what kind of person you are, and this is not the only one. This is dangerous thinking. This is anti-human thinking. Okay, he's against you. It's his class of people that won't be called. It'll be the rest of us because he's important and he's necessary. The other thing here, I like visuals. Foreign-born population grew by 5.1 million people in the last 2 years. Okay, so there's 2020. I mean, it was growing through all these administrations. It took off. You know, did we ever have a referendum about this? Did we ever say, okay, guys, we're going to open the gates to immigration to the United States from all over the world, and it's going to change the country demographically, culturally, politically. It's going to have a lot of changes. Okay, did we have a debate about this? No, they just did it. And so over the last 2 years, they're going to push the accelerator to the floor. Okay, and we've talked about this before. Now, some people think this is a good thing. I do not think this is a good thing. Okay, I believe that if you want to come to this country, you can bring a big amount of cash or resources or brain power. I don't want to I don't see any benefit to letting in the world's peasant population that brings nothing here. It's a fact that wage inflation was restricted during this pandemic, coming out of the pandemic because of this inflation. It would have been even more. So what you're doing is, how does this benefit the people that are here, the U.S. citizens? You're not even allowed to have this discussion. You know, without this immigration, it's likely that these progressive institutions wouldn't have been able to advance themselves, because now we know as fact that in the census, the congressional districts and electoral vote allotments are based on the census, whether the people are U.S. citizens or not. We know this now. Elon Musk talked about that. We talked about that last week. So you go in 1970, basically, from to 4.7% of the foreign of foreign-born population to now 23.3, and just over the last 2 years, it's jumped by 8%. And did anybody say, hey, we want to have a discussion about this? Do we want to, what is this going to mean? How are we going to, and you see all the problems, right? So I believe that this is the only thing that I care about I'm a single issue voter when it comes to this, and I want the immigration put under control. I want all of these people that are here illegally deported. It's just how it is. That's how I feel about it. And you can call me whatever name you want. I don't care. I'm past that. I'm over the event horizon. That doesn't affect me anymore. I have many other opinions that are not politically correct. I don't care anymore. This has to be dealt with because everything else stems from this. The amount of congressional districts. Where would the Democratic Party be if they didn't have this? A lot of these people go to majority blue states. So people that are productive have left those, are leaving those states, but they're able to replenish them and hold their amount of congressional districts and do the things they do because they are able to replenish with the peasant population of the third world. You know, people come here, they don't go to Snack, Nebraska for the most part. They go to, Miami, Houston, Chicago, New York, LA. That's where they go because there's infrastructure there. There's other already communities there that are from the same place of the world they're from. They're comfortable there. They can usually get some type of low-paying work, what have you. And so the people that are benefiting from this, again, are the oligarchy, the people that are running the country. The Republican Party doesn't really want to do anything about this because they are beholden to the U.S. Chamber of Commerce, which wants cheap labor. So, who is up there representing you? Very few people speak out about this. And so this needs to get under control. This is the main issue as far as I'm concerned over all other issues, because a lot of everything else, a lot of things come from this. And if we don't get this into control, but I don't think we will. I think we're over again the event horizon on this, and we will be reaping a lot of negative benefits going forward. And it is solvable. It has been solved before. I'm not going to use the term of the legislation during the Eisenhower administration. It can be done, but again, there's always seems to be a lack of political will to do it. What's necessary. You can fix this violence, that overwhelming amount of violence in these inner cities very easily, but there's not political will to do it. There's a lot of problems that can be fixed easily, but there's no political will. But you vote harder. Let's just vote harder and it'll happen, right? Highest taxes in Europe are paid in the West. Look at Spain, 47%. This is personal income taxes. 45% in France, 45% in Germany. But I'm not going to name the countries, but I'm just going to run my arrow here. A lot of countries here in the Eastern Europe seem to have less personal taxes. I don't know if that's just a residual from when they were under communism or what have you. I guess the argument can be made, well, they don't provide any services there, so you have a better quality of life in these countries. But do you? It depends, I guess, right? I mean, these arguments can be made. I mean, you have the highest here in Austria, I think. Finland and Austria, like Finland, 57% of your personal income tax rate. That's crazy. So anyway, I thought this was interesting, that the bifurcation between Eastern Europe and Western Europe, kind of interesting. And over time, as these countries are, because they're in the EU, they're going to try to pull them closer to this, right? Because they've constantly, EU's been fighting with Ireland about their lower rate that they had for corporations and stuff like that to stimulate economic growth, but they've been fighting with them for years. But you can see the personal rate. And I guess probably without saying this, somebody's going to come into the thing and say, well, I live in this country and it's not that. This is probably the top rates. I don't know. I'm sure everybody in these countries, low and middle class people, lower class and middle class people aren't paying 50%. These are probably the highest tax rates. I don't know. But it's interesting. I thought it was an interesting to look at. Okay, guys, that's it for this week. Again, thanks for the support. Thanks. The channel continues to grow and the Substack continues to grow. Again, we have the free email that comes out every week with a lot more interesting, kind of a sit down thing where videos, interviews, articles that I find interesting. And then, of course, we have the Actionable Intelligence Alert newsletter where we come up with actual investment ideas that are kind of themed around what we've been talking about in these videos. and in the free email. So if you're interested in those, please go into the show notes. People will always ask me or send me a message, how do I subscribe? Everything is in the show notes. Go below the video and open up the show notes, and there are links to all of that good stuff. All right, guys, that's it. We'll talk to you next week.